So time to do some magic with strike, right? Why are we seeing this market reaction and why you should not be surprised even if it reacts some more in the next couple of days. Now that's, I think, the primary thought and what I'll really try to get across here. If you heard me at the start of the month, we were looking for this move up from the bottom in August. And essentially what I was saying is, are we going to see a change in seasonality? Now what that means is when you go to the strike software, you can actually check seasonality for any index, and you can go to the Nifty 50. You can open the seasonality graph. Okay, we have it here on the overview page. Sorry, I just changed it. Right down here. Now either you can end up looking at, well, how does this all look? The series of greens, is it all green? Is it all red? Now the reason you want to see that breakdown is when you look at the average return and you can plot that as a graph. We had the best month here, July, right? That was the big rally. Then you had August, the big correction. But this is September. This is not exactly great. So there are two things that go into this. One is at the end of September, it doesn't look so great. Okay. At the end of August, that September is not going to be great. But at the end of August, you also have an oversold market, where the RSI has cooled off. So when you go back to the charts of Nifty, okay, you have an RMI which eventually swings back into buy mode. So you go to the Rohit setup and then you look at what happened here. It gave a buy signal, a new buy signal on the 1st of September, right here. Okay, so when it gives this buy signal and you get a rally, because it had been falling for almost 5 weeks consecutively, which is the longest decline we've seen in quite a while. In fact, most of the declines even in this phase were not more than 3 weeks. So 5 weeks was definitely long in the tooth, and the moment you got a signal, it was time for a move. So I said at the beginning of the month, maybe this month wants to be different, right? Till this advance is complete. Now that you've got this rally is not being accompanied by Reliance. It's not been, which means that Reliance didn't make a new all-time high, but neither did Bank Nifty. So there are a couple of intermarket divergences that started to develop. And then that takes us back to, let's not forget, seasonality is still a real thing. Just because I thought, oh, well, looks like market's going up, September seasonality might invert itself. At the mid of the month, the rally looks done. And then you start thinking back, is it time that the September seasonality really plays out, which means it mean reverts, which means a negative return compared to what is supposed to be positive. But August was actually not positive, but this is the average return here. This year we ended up seeing a minus. So I was wondering, will it invert minus to plus? Now we are somewhere in between and we are seeing a market that's correcting. So the level return has actually come down. We still have the rest of the month to see whether that happens. But the typical September seasonality, if you see past, is a lot of red, right? So you have a minus 3.7 here, 6 here. These are the big bad ones. A lot of small ones, because there's a lot of volatility up and down, up and down. So it's not a straight line typically in September. October can be more of a straight line, either bullish or bearish. So we'll see that's where the seasonality starts improving. So remember, you can't just blindly say, oh, this means it's going up or this means it's going down. But you can use it in combination with what your chart readings are to sort of sense what may happen after a move has already taken place, or if there are some warning signs. And right now, the weak point, which is September, after what's been a strong first half of September, simply means that second half could have been volatile. And then you got those lead signals from things like the intermarket divergence, the super spike in volume. We've all read my analysis today on the charts of the PSU Bank Index. Right now I'm choosing volume and delivery, another interesting tool. And you can see this huge volume spike here. A lot of it is trading, which is happening here, which is comparable to previous spikes like this one where you had a max volume spike, and another one, if you can go past here, each of which were followed by 20% corrections. Then there are smaller spikes like this. It makes you wonder, is this really a buying climax? That at least near term you have to consolidate, correct. Something has to happen to cool off this madness which is going on. It doesn't really change the long-term trend, because for a long-term investor, he can very well draw a nice parallel channel here and say, I don't care if it corrects as long as it's not really breaking these channels. So he's okay with a drawdown of 15-20% as long as he keeps compounding for the long term. But to a short-term trader, this becomes a very interesting point. You can't simply hang on to a trade if it's going to drop 20%, right? I'm not saying it will or it won't, but that's the risk that we are able to quantify based on historical fact that high volumes always, and that is price volume theory, right? Volumes go up with price and then they come down with price. And so if prices are rising, volume spike to a point where they're too much, and that's what you judge from history. And then they cool off to a point where nobody cares, and then that's where you get the low point. Like this point, who the hell cares? There's no volume. So this does show some level of madness. Can madness just go on like this? There are times in a third wave where a lot of accumulation is going on. So when you see something like this, you actually are watchful. Okay, is this going to continue with this kind of volume, or does this mean something can turn? Well, at least we had that red flag ahead of this recent correction, so we'll give it some credit. And what we're going to do is watch whether the correction itself now is going to take shape in some format. Is it going to be ABC? Is it going to be a regular flat, a zigzag? That pattern will not be apparent. We'll let it pass because tonight is going to be the FOMC meeting. So there's an event, and events can cause any kind of move up or down, and therefore you let the event play out, and then we look at the internal wave structure on the hourly, something we discuss in the Nifty daily intraday update with Jay every day in the live. Well, we won't call it live, but it's while markets are on, we just post that video at midday on the Indiacharts Insiders on the Nifty analysis for the day on the hourly chart and what the structure is. So you can watch out for that, which should update tomorrow based on the subsequent market action, and that will sort of tell us what is going to be the structure of the move from here. Because is it just going to be a simple, quick and easy correction, or is it going to translate into an A or a B and a C and take a little more time? All of that is working itself out. It does look like a ABC in the mid caps at least. So that is one place, again, watching place to really figure out what is happening is the mid and small cap. So here's the small cap index. We've seen the sell off on the daily chart. The RSI is cooled off. But what might be is that this might just be wave A, this may be wave B, and I'm watching already back to the 20-day average. If we break the 20-day average, we are doing wave C down. Okay, and then that would complete the structure, and maybe that's another thing to watch out for before we say that the worst is done for the market in this current pullback. Now, if it does that, then possibly in the next 2 days we'll also see the weekly RSI cool off, because if I go to the weekly chart, the RSI had also gone up all the way to a high of around 89, which is pretty high. So further correction would bring it down. Right now at current levels, it is at 79 based on today's closing levels. If it further cuts from there, we will see this reading further come down, and that would cool off the weekly RSI as well. Both the daily and weekly had coincidentally gone to the 88, 89 range, which is excessive, and that's another reason why you needed to correct it. And we are seeing that in the broad market, the super high extreme volume, which was being driven mostly by PSU banks, and that volume pattern you can actually see in the Nifty 500 as well. So if you think it's only about PSUs or mid caps, it's combined, and you see the mid 500 volume. When was the last time we saw this volume? Back here. Now, I'm not really thinking it's going to be this prolonged corrective phase, but something for sure which takes a little while. So that's why I said a kind of an ABC structure, and then we possibly pick up again. So that requires patience. We'll have patience. Let's give it the next couple of days. We have expiration next week, somewhere between today's FOMC meet and next week's expiration. We should have the answers as to what is going on. We should have some kind of point at which we can say, okay, fine, looks like this pullback is done. Are we going to continue higher from here itself, or is this going to take a little longer? So watch out for those updates at Indiacharts. And yeah, I've shown you a couple of interesting tools on Strike as well. So if you haven't used the platform yet, what you need to be doing is quickly go and sign up for Strike. Simply go to web.strike.money. That is the platform address. You can see it up here, web.strike.money forwards, and you can just log in. It's free right now. Even if it gets paid at some point of time, there will be a trial period, so you can always try it out, and I'm sure you're going to love it. It's addictive. I don't think anybody's going to leave once he gets in. So thank you.